Flash of red, which was quite unexpected. One was hoping the way we closed yesterday and the news of the Chinese rate cut will help us get some crutches today, give some crutches to the much beleaguered bulls. But at least as of now, the evidence is not there.
Oh yes, the evidence is not there for sure. And look at what happened in the US markets. I mean, it was one tumultuous ride. You know, we haven't seen this kind of volatility in a very long time. A 400-point up move, then a 200-point downtake. It just goes to show that perhaps that measure that the Chinese government took is not enough to spur sentiment.
Well, actually, we had this kind of a tumultuous move a long while back. That was on Monday. I mean, the Dow traveled actually 4,900 points on Monday if you counted the way up and down and up and down. And yesterday, if you counted its up and down movement, it was 1,600 points. So, you know, that is what is quite clearly weakening the bulls and the bears. This kind of a gyration can't leave anyone healthy. So that clearly explains why the market is not able to take advantage of even good news. And Anuj will, of course, speak about it a lot more. But just to come back to the rate cuts, these rate cuts have been expected by the markets all the way from Sunday. It was expected after the Friday weakness that Saturday, Sunday itself, the Chinese government would announce. So to that extent, it was not a huge bonanza, since, you know, people were expecting it, if not this Sunday, then maybe next Sunday. It was always in the air. But the expectations were actually even more. There were people who were asking for 100 basis points reserve ratio cuts and 50 basis point rate cuts. So to that extent, the market is not that enthused by what they saw. Because as the market weakens more and more, and there are fears of a weaker and weaker Chinese economy, the expectations in terms of a policy action also keep going up. And just about everyone tells you that whether in developing countries, you know, whether it's China or India, rate cuts can only do this much. Yes. It has to be fiscal packages. Yes. Rate cuts are for very sophisticated economies where the private sector is very powerful, where bond markets are very active, and a rate cut immediately means, you know, lower cost of money and the economy can be put on rails a little faster. In countries like India and China, much more so in India, rate cuts have a very small role, perhaps a psychological role. A large part has to be played by the fiscal government, by the fiscal authorities, and that's why the Chinese rate cut is seen as just one first good step. But slowdown fears remain, and also a certain inability to believe that China is now in control of the situation. First the stock market gyrations, and then the yuan devaluation, and then of course that PMI number has still left the sense that probably the Chinese authorities, who are until now seen as omnipotent, have lost control of their economy somewhat. Yes. And that feeling is not going away. But I think yesterday's move has got a lot more to do with technical factors of extremely beleaguered traders. So Anuj, really, I mean, I would throw the ball entirely in your court. Isn't that the reason why you're not going to see a healing that is quick?
Morning, Lata. Morning, Sonia. You know, in fact, actually, I'll start with the 2 or 3 sayings in market. Okay. Some of these sayings are 50, 100 years old, but they are true, you know, even today. First is that a frightened bull is the biggest bear. I mean, second is, you know, the amateurs open the market and professionals close it. Okay. And the third is, till the time you keep hearing buy the dips, the dips will keep getting deeper. Now, what happened in market yesterday overnight in US, the last hour was really nasty. That's the biggest cue this morning. That really, you don't have to look at any other cue. You just have to take a look at what happened to the US market overnight and in the last hour of trade. That is telling you what the problem for the market is. Do you think the bears would have sold in last hour of trade? No. It's the bulls who would have sold in last hour of trade. And that's the problem for the market right now. The sentiment has been damaged so much that every rally is being used to sell. You know, if you're stuck with positions, you see, wow, 400-point uptick. You know, you stay put. But the moment that 400 becomes 350 or 300, you're the first to bail out. And that's the herd mentality that follows. And that is why you see the kind of impact that takes place in late trade in some of these markets. And right now, this is a sell on rally market. Sonia and I were discussing this yesterday. Sonia, you know, that expected large FIS sell number, and which is what we saw, 2,000 crore sell number from FIS yesterday. The profile of rally was suggesting it for short covering. You know, all the banks rallied, all the real estate stocks rallied. Yes Bank was one of the biggest gainers. It was telling you that this was a bit of a short covering bounce. Having said that, the DI buying was clearly telling you that at least there's one institution like LIC which is willing to support this market at every level. And sometimes, you know, in the medium term, the domestic institutions have been the most savvy lot, and they have made a lot of money for investors. So that point has to be taken on board. Once this market stabilizes, those who would have been brave enough to buy on every dip, in a long term they're going to make a lot of money. In the short term, of course, things can go wherever. The Nifty could go to 7,400, it could go to 7,200, it could go to 7,000, and may still be in a bull market. The point here is, at what point does the mayhem stop here? Yesterday it didn't look like it was over, and the evidence clearly came with the US market. The one thing that could go in market's favor today is that from the FI index futures data, there was first sign of long build-up. Not for this series, but for September series. There was buying of index futures, 1,000 crores. And I saw for the first time, after a really long time, FIs adding index longs. 94,000 index longs were added. That's, I think, a bit of a positive data for at least September series. If you take a look at the index options, that's telling you one thing loud and clear. This market now has a peak at 8,000 for this series at least.
Oh, that much?
For this series, it's just today and tomorrow to go. 8,000 call yesterday added so much open interest, about 7 lakh shares. The premium was 33 rupees. Yesterday, when the market surged about 1%, 8,000 call actually lost about 50% of its premium. So that was telling you two things. One, the volatility was coming down, and two, that's really the peak for the market for the current series. In September, what happens? Well, a lot will depend on what happens to the mother of all markets, the US markets, what happens to China. But the sense you get is that in the near term, just because you don't know the exact nature of this problem, the best idea would be to stay light, maybe use every dip for portfolio investment, maybe 5 to 10% of your money for long-term portfolio investments in good stocks. Another example was Amra Raja yesterday. That stock went back to all-time highs. Even in this market, there will be stocks which will be resilient, which will keep going back to their all-time highs, and that is where you're going to make money. It's going to remain the bottom-up stock picking market. For now, we're going through global turbulence. Once that is over, the market will present great buying opportunities.
Normally, how long? Sorry.
No, I just wanted to ask about, the way today's market trend could be, because there was big selling that we saw by FIs yesterday of almost 2,100 crores. And yesterday as well, we saw a lot of individual heavyweights that were under pressure, whether it was HDFC, whether it was a whole host of IT stocks. So is there a possibility that, after a bit of semblance yesterday, there could be a fresh onslaught from the bears today?
Yeah, that's a distinct possibility. From bear's point of view, it's better to sell at 7,900 than to sell at 7,700, right? The market went to 7,700 and then had a recovery towards 7,900, so it's better to sell there. Sonia, right now the market is in a panic mode. Right now, what's happening is that it's almost like you don't want to see reasons. You just want to sell. That's the market setup. And my sense is that today you might see that, but I won't be surprised to see intraday short coverings as well. I won't be surprised to see, if the market opens, as the SGX Nifty is indicating, 100-point down tick. I won't be surprised if this market at any point has a 150-point down tick and has a equally sharp 100-point recovery as well, because this is that kind of a market. Yeah. You are in expiry week. It's a lot of your options are going to give you a lot of values trading. There will be people who will be willing to buy the dips as well, and really smart people. So this is a market which is going to remain volatile. I don't think shorting at 100-point down tick is going to make money, but there will be people who will be willing to short once the market, maybe if it comes back in the green. It's really going to be very volatile. If the volatility of last 2 or 3 days has troubled you, there's more in store for you over the next couple of days.
Okay, I guess volatilities like this play out over what, weeks, months?
Yeah, weeks for sure, and I think this has been the most volatile series for our market in really long time. And
I guess the comparisons are coming with October 2008.
Exactly.
But in October 2008, the values were somewhat lower. Even if you saw the same amount of FI selling, the hurt was much more because, the index was at that time 12,000, the Sensex. Today at 26,000, we should be a little more robust. So we should not really be comparing ourselves.
That is why, when the day before, our market cap loss was highest, even though the market fall was not highest by any stretch of imagination. It was 4th or 5th highest, but the market cap loss was the highest purely because the base is higher now.
Indeed. Also, we must point out that there was buying by domestic institutions, and that continues in this market. So about 1900 crores of delivery of buying in the cash market by domestic institutions, and a lot of heavyweights like Reliance Industries, ICICI Bank, Axis Bank, Tata Motors, all of them saw delivery-based buying yesterday. So well, we talk about all that and more through the course of the show, but here's what you'll get to see in the next 2.5 hours. We'll track all the action from Dalal Street with our market master for the day, Anand Shirgaonkar of UBS, so he'll join in just a bit. Lots of global market talk is lined up with Sanjeev Sanyal of Deutsche Bank and Jamie Fay of Citi. Jim Rogers will also join in to talk about the commodity universe and the move that we've seen in crude. And Power Make projects lists on the exchanges today, so we'll touch base with the management to find out more about their company. Banks have been at the center of the news flow of late in terms of selling pressure. Anil Agarwal, the banking analyst at Morgan Stanley, will analyze the sector for us. And also top trading strategies, as always, lined up with Sudarshan Sukhani this morning. Okay, first let's tell you about the US markets. It was all over the place yesterday. It was quite disappointing actually. There was a big 400-point rally initially, but in late trade that rally completely unraveled and the market fell about 200 odd points or so. It's been the biggest intraday reversal that we've seen since 2008. So those are that's the kind of volatility that